Hello, everybody with us today. I am David Gowenlock from ClearlySo, and I'm very happy to welcome you to the 5th event in this series of webinars on impact investment funds, a series co-sponsored by ClearlySo, Octopus Investments, and Paul Hastings. For those joining us for the first time, recordings of our prior events are available, should those topics be of interest. And today we are discussing the future of food. I'll let our speakers introduce themselves, but I'm delighted we're joined by a panel with deep expertise in distinct areas relevant to food and agriculture, across science with Elliot at the GFI, policy with Ian as former Chief Scientific Advisor at DEFRA, and investment with my Rabobank and Michael at Blue Horizon Ventures. So, in alphabetical order by first name, let's start introductions with you, Elliot, then Ian, and on to Michael.
Great, yeah, well, thanks for having me and welcome everyone. My name is Elliot Swartz. I'm a senior scientist at the Good Food Institute. We are an international nonprofit that aims to accelerate the alternative protein market. My role specifically is as a senior scientist that focuses on cellular agriculture and cultivated meat technologies and understanding really what science we need and what disciplines need to be flow into those industries to accelerate their paths to commercialization.
Thank you, Elliot. Over to you, Ian.
Okay, thank you very much, David, and it's a pleasure to be here. My name is Ian Boyd. I'm a university professor at the University of St Andrews, but I spent 7 years, as David said, as Chief Scientific Advisor on food and environment to the UK government. I'm actually a marine and polar scientist by background, and I've kind of drifted into food just because it's one of the most important things that we have to deal with. So that's my background. So thank you.
Thank you, Ian. Mai.
Yeah, thank you, David. So Mai Kara is part of Rabo Corporate Investments, which is a captive private equity arm of Rabobank. Me personally, I'm covering a range of private markets across food and agri globally, and by training, agriculture economist and agriculture engineer. For the last 4 or 5 years, just investing in food and agri.
Thank you, Mai. And last but not least, Michael.
Yeah, thanks very much, David. It's a pleasure to be here today. My name is Michael Kleindl. I'm co-founder and managing partner of a venture capital firm based out of Zurich called Blue Horizon Ventures. And we do invest capital worldwide into food tech and sustainability around the food system.
Thank you, Michael. It's a pleasure to have you all with us today. I'll just take a very quick moment to note that Ian sits on the Scientific Advisory Group for Emergencies. That's a group currently advising UK government decision makers around COVID-19. And Ian will have to drop off a little early, so I'd just like to thank him now in advance for taking the time to join us today. I'll briefly introduce myself. I'm based on ClearlySo's Impact Fund Advisory Team. ClearlySo is Europe's leading impact investment bank based in London. We are an intermediary who advises both impact-oriented businesses and funds and asset owners seeking investment solutions offering market rate returns alongside positive social or environmental outcomes. Since 2013, the firm has advised high-impact enterprise and fund clients in raising over £470 million of capital in almost 200 transactions. And ClearlySo's fund advisory team works with alternative fund managers, primarily those with venture capital and private equity strategies. So thank you all for joining us today. Without any further delay, I'd like to dive into the topic at hand. So to start the session, I would like to quickly display a chart recently published in the Financial Times displaying VC investment in bioengineered foods. And my question to the panel, and I will direct this to Michael to start, is what is happening behind this chart? What is going on that means so much capital has suddenly rushed to the market in this area? Over to you, Michael.
Thanks, David, for the question. Yeah, it's fascinating to see the chart, and the chart probably reflects a little bit a variety of things. One, a general much higher awareness for sustainability, which is really driving capital out of, call it, dirty asset classes into more cleaner or more sustainable asset classes. And the result of that capital switch move is on the founders and entrepreneurs level, that there's more and more people now going into that space, seeking opportunities there, because suddenly there is capital available. And this is leading to a situation where there is more deal opportunities coming up, better quality coming up, more capital flowing into the space, which drives the chart forward. And then last but not least, COVID is probably a big accelerator for our work. I mean, the topic of we have a problem has really come to the rise, and this is further accelerating corporates, family offices, asset managers, institutionals to take a serious look at our scene and start to pour capital into it.
Thank you, Michael. Yes, we've certainly seen COVID have an impact into people's awareness of agriculture and the link between animal agriculture in particular and health, and perhaps one of the driving factors. Any other insights to offer as to what's really driving this trend?
Yeah, right. I mean, I would echo what Michael said here. It's at the end is the consumer who's demanding a more transparent and environmentally friendly food system. And it's taking a higher priority on the agenda to actually change that. So one of the solutions is plant-based diets. Certainly, you know, if a consumer is demanding it, there's going to be investor appetite to pour money into the sector. So that's what we saw. And at the end, I think maybe we can reference here just the plant-based alternatives in the quarter of this year grew 300% versus last year. I think that all kind of resonates why even more capital should come into the market. So indeed, I think it's justifiable, and there is a societal change that is coming to with it.
Thank you. So it's also changes in consumer preference. Elliot, I'm curious to hear from you. Is there anything happening in the science? Are there changes in science innovation that's making these new technologies or new innovations possible?
Sure. So yeah, I just add some color that you know, a large and growing consumer segment are flexitarians, and those are people that are sort of consciously trying to reduce their meat consumption. And so if you can create meat products that compete on price and taste and convenience, those are the drivers of sort of consumer preference and choice, but you're able to produce them in a different way, either through plants or through cultivating animal cells, then you now have access to a $1.7 trillion global market. And so I think the heavy investment in R&D by companies like Impossible Foods and Beyond Meat showed that as you approach the taste and textures of animal-based meats and even reach those tastes and textures and in comparison, then consumers are going to want to demand those products even if they're priced at a premium. And that really changed the game, and I think others are jumping in.
Thank you, Elliot. Ian, any other insights from yourself? Is it there any other factors at play here?
I would agree with everything that's been said already. I mean, I think I would divide it down into what I would call proximate and ultimate causes. I think, you know, the consumer demand is really the proximate cause, and also to some extent the technology developments that are going on around that, and the shifts in preference. But actually, I'm slightly more interested in the ultimate causes, which are in kind of the sustainability area. Sort of how do we achieve sustainability? And it's the strategic issues which actually at the end of the day are the ultimate driver behind this. And you know, I just reflect on the fact that food production in its traditional form is extremely inefficient. The sort of energetic efficiencies of producing a calorie of food to get it on somebody's plate are extraordinarily low. Anybody through technological development who can make that slightly more efficient will bring greater competitiveness within the marketplace. And boy, it's a massive marketplace. You know, everybody eats food, and there's an immense amount of money to be made out of it. So when you see a curve driving up like that, it's because people who have capital think they can make money out of it. Okay, I think that there's an ethical side to it. There's a wish to move with the times and all that sort of stuff. But my sincere belief is that new technologies that are coming through will drive that curve harder and harder. And we need to drive it really hard because we need to become a lot more efficient at producing food by the middle of the century. And the current rates of increase using traditional farming or traditional food production just are not fast enough. But it's great to see that level of investment. And of course, a number of years down the road, we'll see the technologies coming through and we'll see the uplifts in productivity and things like that go with it.
Thank you, Ian. I mean, you covered interestingly there the real need for innovation, the inefficiency of the current food production system, and the fact that perhaps a lot of these changes are starting to be driven by fundamental economics and the ability for increased efficiency. So I'm curious to understand what's catalyzed this change in terms of capital flows. Who have been the early investors? Where is this capital coming from? And I'll probably follow the same order and start with you, Michael. Who are you seeing as co-investors in the deals that the fund's investing in? Where is this early investment coming from?
Yeah, I mean, right now, probably we have people from all over the place moving into the space. It's probably started out where there were a few animal lovers, some, I don't know, 10, 15 years back, and they started to be very concerned about animal welfare. And they said, well, we have to change the food people eat so we get the animal welfare we want. This has now, we have added two dimensions to that, let's say, theme or to that motivation. One is global warming, which is a big one, and then the other one is personal health. I mean, and now it's really these three topics driving investments and work in the space. And I think we see large corporates, smaller corporates. We see asset managers, we see family offices, we see celebrities, we see new venture funds. It's still a little bit unstructured. I mean, I used to work in tech before, so that was maybe then mid second decade, 2000, more organized already. And now this is still very young, early industry. But it's a lot of capital from a variety of places, which is good.
Thank you, Michael. And you mentioned there's some early investors, perhaps around family offices and around those who really want to create a change and really care about these issues. But seeing firms such as Rabobank and large, very serious investors playing in this space must mean that you really see an opportunity beyond above just doing good. So I'm interested to hear your perspective on that and who you're seeing alongside yourself.
Yeah. Certainly, David. I guess food presents probably 10% of the GDP, global GDP, and it's been proven through a couple of last months where we're going through this pandemic that is an incredibly resilient sector as well and can generate great returns. So I think that's alluring even more and more investors to come, and specifically on the private markets. So if we take private equity at this point, investing in food and agri, I think it represents just maybe 1 or 2% overall total volume of investments going into private equity. So putting that in perspective with the GDP, I think we have a discrepancy there, and we have to even invest more. And then on your question, who are the folks investing now? I think if we go probably 5-6 years later, earlier, it would be a couple of venture funds and maybe a few dedicated food and agri funds and the rest on the generalist play. However, I think we are seeing now even 30, 40 new funds per year just dedicated into food and agri space, and it's growing. So more entrance of pension funds, sovereign funds, endowments. I think it's starting to be more a broader landscape and universe of buyers and investors.
Well, it's great to see some of those larger institutions coming and playing in the space. And as soon as we see pension fund money sort of flowing into this area, obviously they have a lot of weight behind them and able to fund a lot of these companies as they grow in size and valuation, as we've seen some recent companies kind of attracting a lot of capital. I'd like to pass to you, Elliot, now and to understand a bit of the science behind this sector. There's obviously different technologies at play in these various companies, and it would be nice to understand how we can divide up this sector, how we can segment this sector, and how investors can maybe start to understand the different areas that investments are flowing into.
Sure, yeah. So when it comes to alternative proteins broadly, we sort of segment that industry into three pillars that have seemed to emerge. The first is by creating meat analogs through plants, so taking plant proteins and other plant materials and processing them into textures and tastes that resemble meat products that consumers already are familiar with and know and love, meat and seafood, that is. And then you can also have the production of animal cells or large-scale cultivation of animal cells, where you take stem cells and replicate them in these bioreactors at large scales to produce fats that go into plant-based meats or produce actual meat products. Those are not yet on the market, but are being developed by nearly 60 or 70 companies across the globe currently. And then the third pillar that has emerged is fermentation. So essentially using microbial fermentation, yeast, fungi, plants, bacteria, and other microorganisms to produce animal proteins that serve as high quality functional ingredients into foods. So examples of that are producing things like whey or casein proteins that are found in milk and dairy products, and then just producing them in microorganisms and harvesting those proteins for ingredients. And then fermentation can also be used to produce actual biomass that kind of flows into these alternative protein products as well. So a good example of that is fungal fermentation or growing fungal mycelium that can create textures and tastes that resemble meat as well. And I think importantly, we think about these things separately from a technology perspective and the sort of materials that flow into those segments, as well as the expertise that's involved in those segments. But we think that the future of food is really going to exist along this sort of spectrum of products, where a lot of the future products will actually be hybrids of those approaches. So for instance, the Impossible Burger was one of the first examples of that. It's primarily made up of plant-based ingredients, but it has a fermented soy leg hemoglobin protein that adds this functional quality, this heme ingredient that allows it to sort of give this meat aroma and cook more like a burger. So more of that sort of hybrid approach, I think, will begin to be seen as this industry moves along in time.
Thank you, Elliot. I think it's interesting. There's a variety of innovations all happening at the same time. I had a conversation previously with Michael about how food is such a big industry, and yet there is very localized taste. People like different foods, different types of foods. So it'd be really interesting to see how these innovations develop and can serve many different tastes across personal individual tastes and cultural tastes. So it's interesting to see the scope there. Ian, whilst we have you, and before we dive too deeply into some of these innovations, I'd just like to reconnect back to kind of our current agricultural production. And we're seeing all of this money flooding into companies in these areas. From what we've heard so far, primarily private capital. Yet in Europe, the existing food production system, as I understand, is largely supported or heavily supported by agricultural subsidies. And I read, for example, that all of the profit of an average UK livestock farm comes from cap payments, from subsidies. So I'm really interested to hear your view on what we can expect as a response from government to changes in our food system, and what government-led incentives are likely to change that might affect this area.
I mean, I think your statistic is roughly right. I think in certain parts of the country, it's absolutely right that many livestock businesses would not be in business if it weren't for subsidy. It depends on the livestock businesses, to be quite frank. I mean, chickens and pigs actually do quite well, but anything that's got a rumen in it, a sheep or a cow, doesn't really do very well. Although I think some dairy is quite profitable. But basically, a very large part of the livestock sector isn't profitable. And actually, it's the same with cereals as well. So, the agricultural system in the UK, and actually in many parts of Europe, is really being sustained by subsidy. Now the UK is moving out of Europe, and it's developing its own approach, and that approach is departing or is planned to depart gradually from the European system, which has really had three pillars to it. It's been a social policy, it's been an economic policy about productivity, and it's also been and environmental policy, but the social policy has really dominated in the common agricultural policy. And that means that a lot of the subsidy is not there really about productivity or the environment. It's actually more about keeping people happy on the land. And of course, politics drives that a lot. And it would be naive to think it wouldn't drive it in the UK as well. So whatever the ambitions are for the UK, and I think the ambitions are to make the environmental and productivity side of that policy triage, if you like, or trio, much bigger than it is in the common agricultural policy. But the politics will continue to drive up the social side of it. So whether we end up in a different place or not is another matter. But the objective is to shift a lot of the agricultural support into what's called public goods, which are seen to be mainly environmental goods. And that could change the complexion of agriculture very significantly. I'll give you an example. It is much more efficient if you're wanting to store carbon, and if you've got a decent carbon market. We don't have that at the moment, but we may well in the near future, to leave marginal land ungrazed than to graze it and put it through a fermenter, excreting methane and things like that, and to turn it into meat. So it may see a very significant change in land use across the UK, but this will probably only happen over a decadal timescale. It's really unlikely any government will step in and say, all right, we're just going to change everything now. They'll change it gradually over quite a long period of time to allow people to adapt. But the reality is that we're probably going to be producing a little less food from the UK, but we'll be producing what we do produce will be much more efficient. My estimate is that you could actually free up about 50% of the agricultural land in the UK now, and your food deficit would be about 20%. So there's about 50% of the land is only producing 20% of that food. And the new technologies that Elliot's just talked about, and there are a lot more than he was talking about, obviously meat, but there are an awful lot more than that as well. If we invest properly now, they will fill that gap pretty quickly. And I think that strategically, and this is what I was saying when I was in government just over a year ago, strategically, government ought to be investing or encouraging investment in those new technologies, and then ramping down essentially the subsidy system, which is changing land use, reducing productivity, national productivity overall from the land, and ramping up productivity from these new technologies. And that's the way I think a future wise nation that's wise about its agricultural productivity will be structuring things. Whether the UK will actually do it is another matter.
Thank you. Interesting to see the potential here for the change in land use due to the low productivity in some areas. And we had a question come in that I'm going to direct you now again whilst we have you, and it's on the same topic. With the fiscal coffers being emptied as a result of COVID-19, do you think that these subsidies will fall faster and this transition will be accelerated? Is one of the silver lines perhaps an increased acceleration of this trend?
Well, I'm not sure I can read the runes quite that well. I think it's quite possible that the Treasury will look at the roughly $3 billion a year that they dole out in agricultural subsidies as a relatively quick win. I think it would be pretty tough if they cut that off instantly. In fact, it would cause a huge amount of huge social problem in the rural communities. Although, having said that, agriculture is about 4 to 6% of the rural economy, so it's not huge. It's just that there are individuals there, and there are individuals who have political power because a lot of the current government actually has rural constituencies. So it's not going to be something that is going to happen quickly. However, I think there will be a more rapid tapering of the subsidy system than there has been in the past, because it is a clear win that the government could have. What I would like them to see is just to take even 10% of that 3 billion and invest it in a partnership way with industry in driving new technologies. I think that would be a great thing for the government to do. Whether they will do it or not is another matter.
Thank you very much for that. And Mai, is there something you'd like to add in that regard?
Yeah, I think it's very much just adding to this, what speed of adoption of technology might be changed. So I guess what COVID bring through couple last months is that we see that perhaps access to labor market is a problem. Hence, robotics is playing to a more significant and prominent role. Even if we talk about logistics and cold storage, you are having more open-mindedness towards having automation in such a warehouses. So it is really driving the change on how fast companies will adopt such a technology versus to, just being politically and governmentally set.
Thank you. In that regard, would you say, Mai, or any of the other panel, that there is perhaps a conflict of interest here, or a difficulty that governments face or various bodies face, in that these transitions tend to be away from labor-intensive productivity, and they're involved in industrialized processes, and maybe governments having to weigh up the balance between these various factors, and a move to some of the technologies Elliot has described, and fermentation on a mass scale in bioreactors, I would assume does not require much labor. And I would imagine it's a difficult situation for governments to manage, and reuse of the labor force into new areas. Any comments in that regard, or any other government mechanisms that can help drive investment, more private capital into this area? Ian, over to you.
Yeah, I think it's a good question. My personal view is that it needs a whole different set of skills, and actually I think it needs different business skills as well as technical skills. One of the challenges I used to make to the traditional farming industry was that you're going to be left behind unless you really pick up the pace on this and you reskill, because actually the future of food is through manufacturing rather than food through farming. Now we will always be farming food. There's no doubt about that. We'll always be growing food through farming, and there will be a requirement for those skills, but it's going to become less and less important. It has to become less and less important. Otherwise, we're just not going to square our account with the environment, to be quite frank. But I think a transition of the size that we're talking about has happened in many other industries in the past. I don't think it needs to cause big problems. And I think that we'll be drawing down on a very different part of the workforce to deliver this. There is a question in my mind, however, as to whether you can't overlap the traditional farming to some extent with the new technologies. And I think there will be really creative people in the traditional farming area, and some of them are very creative, who will see the opportunities there and make that overlap happen. But we are going to see a significant reduction over the next 10, 15, 20 years of the number of people who are working farms in a serious way, or producing food in a serious way on the land. I think that we'll still see a lot of the lifestyle farmers around, but they don't really produce very much. And I don't think the public should be helping them live their lives the way they are. I think public subsidy for lifestyle farmers is just ridiculous. And we do subsidize lifestyle farmers a huge amount at the moment.
Thank you. Elliot, anything to add?
Yeah, I just want to say that governments can play a really large role in this whole process, and they can invest or strategically support their local economies and their local agricultural economies. And I'll give a few examples of that. So in Canada, for instance, they've recently invested hundreds of millions of dollars into plant-based meat manufacturing facilities, as well as new incentives for farmers to grow peas and legumes. And those grow really well in their climate, and they realize that there's now a huge market for these crops to feed into this new and growing plant-based meat market. And so farmers now have this option and incentive to do that. In India, for instance, where the mung bean is very it does very well, that's another ingredient that's really on the upswing in inclusion in plant-based meats. And for Indian farmers that usually have very low incomes, this can be really beneficial to those rural economies if they have this new sort of cash crop that can provide a lot of value for them. And then finally, as another example, you have Singapore, which has a 30 by 30 initiative where essentially they want to supply 30% of their food supply produced on their own land. And obviously Singapore doesn't have a lot of land, and they're leveraging a lot of their high-tech infrastructure and labor force to bring that to fruition. And so they've actually invested heavily into these alternative protein technologies. The cultivated meat technologies, the fermentation, as well as vertical farming is really a huge part of how they envision their future food system. So a lot that governments can do strategically to support their economies, but also invest more public dollars into funding R&D that will, again, give them a leg up on a global scale.
Thank you, Elliot. Nice to hear examples of how governments and how countries can start this transition and can invest now to make sure that the workforce can adapt to this what seems to be a very, very necessary change. So we've had a question around health, and this is fantastic because this is the topic I wanted to move on to next. We've covered briefly the environmental need for these changes. I'd like to move on to health, and if perhaps there is a mandate for public bodies or for any other stakeholders to help accelerate this transition for health reasons. Now, critiques of early brands in this space, such as Beyond Meat and Impossible Foods, have attracted attention for being over-processed, perhaps having long ingredient lists, or maybe having high fat and salt content. I'm curious to understand, and I'm going to pass it to you, Elliot, to start with, what the science has to say about alternative meats and about animal-less production sources. And is there really an emphasis for change on a health basis?
Sure. So, well, I think when most people think of Impossible and Beyond, they still think of burgers, even though obviously that's not what they're limiting to. And burgers aren't exactly health foods and probably shouldn't be viewed as such, whether they come from animals or plants. But the consumers that are buying these products are omnivores or they're meat eaters, primarily by and large. And so their purchases allow them to replace a meal with a plant-based meat rather than with an animal meat. So really, what are the consequences of that? And interestingly, a recent study out of Stanford called the Swap Meat Study was the first randomized control study to actually sort of test that hypothesis and compare those diets with plant-based and animal-based meats. So essentially in that study, what they did was they took two different groups and they had them eat 2 or more servings of plant-based meat or animal-based meat per day for 8 different weeks, and then they crossed them over. So those that were eating plant-based meat then switched to animal-based meat, and then vice versa. And so what they found was that the plant-based groups actually had significant benefits in their cholesterol readings, as well as experienced weight loss versus those in the animal-based meat group. And they actually found that the overall levels of protein consumption and sodium consumption were the same, but the plant-based diet had higher fiber consumption and lower saturated fat. So obviously, as a scientist, you don't take a singular study and say, well, okay, then plant-based meats are so healthy, let's all eat plant-based meats. But the early data look good, and there's obviously a large body of evidence that supports that plant-based meats can improve health outcomes in a variety of different metrics. But I think it's important to remember that these first and second generation products are really honed in on taste. That's the largest driver of consumer choice, and these brands want to build consumer trust. They want people to try their products, and they want them to like their products. And later generations of these products will, I think, in my opinion, begin to not only compete and continue to compete on taste, but also make improvements on other metrics like price, sustainability, and their nutrition profiles. And so there's really a lot of promise to tailor the alternative proteins that we have in our future food system to have a variety of health benefits depending on what consumers want. So I think we'll see a lot more competition over nutrition and health in the later stages, even though the early data suggests the early generation products can be favorable as well.
Thank you, Elliot. I can see Michael and Mai nodding in agreement to your comments there, and I'm curious to hear their view. I'll start with you, Michael, as to if you are seeing this in your latest investments, if you're seeing that this second generation moves far beyond just taste and is delivering additional benefits. And I can see, Ian, I'm aware you want to add something.
Sorry, I'm just going to have to go. If I can just say before I go, I think health is a very important factor in this. It's an important factor that's driving people's choices. And I would just put a word in for a program at Oxford University called the Livestock Environment and People program, which is looking at the epidemiology of food and is coming up with some pretty clear indicators about the effects of particularly meat eating on food. And of course, we all know about the Lancet report and those sorts of diets, and that is beginning to have an effect. And that's actually pretty sound science. But with that, actually, I'll say thank you very much and cheerio, and sorry for interrupting, Michael and Maya.
Thank you very much for your time, Ian. Good to have you with us. So back to Michael and mine. It's curious to see there's some skepticism around some of these new technologies, things grown in a lab. Will they really provide us the nutrients we need compared to eating meat that some people say we've been eating for millennia? I'm curious to hear what you're seeing with these latest generations of innovation. So I'll start with Michael and then pass over to Maya.
Thanks, David. Yeah, we do, I think, see a general trend towards more healthier food. I mean, there's no discussion that plant-based is much more healthy than animal-based. I think that's, underlying thing we can start off with. I might go to Maya. I have a bit of background noise. You go first, I go later.
No problem, Michael. No, yeah, taking a couple of points in consideration, I think also on the product profile itself. So taste is very important. Let's not fool ourselves. Of course, there's other factors coming into play, as what is the premium that you have to pay, etc. But taste still is a paramount. And maybe coming back to one of the recent investments that we did in Oatly, where we recognize that production process might not be overly complicated, although there is a certain IP protection included, you still have a very superior taste versus competitors, versus other products on the market. So coming from that end, I think that's what kind of built the customer's trust. So having really creative and thoughtful marketing on top of it, it also bringing, brands like that closer to customers' heart. So in all totality, those couple of factors effectively can really create a mission for businesses like this when they want to turn food into just moments that are healthy and joyful for customers to enjoy, but not providing a lot of toxic elements for the planet. So I guess it is a combination what drives the adoption, and I think Oatly, we're a very proud investor in those businesses. And I'm also aware that Michael in Blue Horizon is invested in the same business as we are, which is Live Kindly. Other probably great example of how you can really generate the demand with the right marketing, right price, but also the taste profile. Michael?
Thanks for helping. Just to add a little words, what we see is that founders, entrepreneurs in the space are really taking the topic of healthiness very serious, and sustainability, but we talk now health. And there is work on reducing the ingredients in the products. There is work on going clean label. There's work on going organic as much as they can. There is work on going locally sourced as much as they can. So I think this is happening. And with version 1, 2, 3, 4 of Beyond or Live Kindly or whatever products we look at, this is actually happening. And then, the health benefits are obvious. There's so much research out there on the health benefits of plant-based, even on the processed products, which and the question probably was relating to, happy to share that afterwards with some of the audience. If David, you have probably tons of it as well at hand. So there's interest, happy to share. It's pretty obvious.
Thank you both. We've set the scene. We have a bit of an understanding about some of the innovations and the reasons that this trend is happening and the reasons why we need it to happen. But let's, we have Maya and Michael, two very experienced investors in this area with us. Let's get to the numbers and talk about returns. What's the spectrum of returns available to investors in this space? And where, and Elliot as well, where do you think that the risk-return relationship is most favorable currently? I'm going to start with you and then pass Michael and then end with Elliot.
Sure, that's a tough one, David, but let's just start with perspective that it also differs what kind of investor you are. So what kind of value add you provide to your investees should be reciprocal to your returns that you achieve eventually. So as long as you've not missed investment thesis in that way, I think that return and your value creation process as investors should be paired. Again, so I'd like to put maybe 2 points. First here, if you are looking at a more macro play where you're going to just ride the underlying trend, that could be just the 6-7% a year, which you're practically just doing by being at the right time and the right place. However, we as a private equity party and a VC investor as well, we try to provide more to those companies beyond capital, which is really adding value in terms of expanding the organization, helping professionalizing the organization, negotiating the terms with the suppliers, distributors. So really bringing the organization to next level. And that kind of processes implementation would require you to achieve the higher returns. So in that regards, I think we start to thinking about high 20s, even 30s, and a couple of times your money multiple. So getting to my second point, I think we can say that private equity returns can resemble other sectors with food and agri, and in even more in the buyout space. However, growth equity and really early stage investing still has to be proven a bit more in terms of returns that it can generate. I guess VC in food and agri hasn't been around that long, and it's not a healthcare that's been 30 years of investment. So you know that if you're doing a really great job, those kind of returns you can expect. So in that regards, there is more proof points to be done in those earlier stages, but knowing the dynamics of the sector and how much value you can create, I think there should be very much parallels to other also very lucrative sectors.
Thank you. Michael.
Yeah, I think little to add. I think it is a young industry, yes, but it's growing, and so we have had first exits. We have had first markups and recaps in the in portfolios across the board. So I think it's a question of time when we see more of that, and then in the largest industry in the world transforming at an accelerated pace, we should be seeing market returns in this sector as well. I mean, personally, I would have no doubt about that.
Thank you. Well, it's reassuring to hear, obviously, those market-based returns will encourage capital flows and increase the speed of investment into this area. Elliot.
Yeah, so obviously I'm not an investor, but I do just want to underscore for the audience that, at least, for the alternative protein sector that I've been talking about, I want to make clear that there's a lot of opportunities that still exist in all of these industries. So, plant-based meats are already on the market, but if you do the math and you start to think about, if we want to replace double-digit numbers of the global meat demand with plant-based meat or other alternative protein productions methods, you need a lot new infrastructure, you need a lot more companies, et cetera, and a lot more capital needs to flow in. And that's going to happen over the next 2-3 decades before we start really ramping up. And that's really important to understand. There's a lot of opportunities from a technology perspective across all of those sort of 3 pillars that I talked about. And in no way is the market sort of saturated yet at all. And there's growing number of opportunities for companies that are forming, that are sort of supplying the picks and shovels for the industry that is growing. So, the companies that are making the technology solutions and the methods or the materials, et cetera, that flow into these companies that are making the products, this is all growing simultaneously. And so there's opportunity across the entire value chain.
Thank you. Mai, something to add?
Yeah, I really like Elliot's point, because he's just pinpointing how we try to operate now with our investment house. So indeed, this manifestation of really plant-based coming to a certain age and maturity where you start to produce even public companies, which is beyond. And obviously there's been huge addressable markets and historic growths that kind of justify such a high valuation and such a high interest. But then on the other hand, you have all these adjacent businesses to food and agri value chains. And this is how we approach it as an investor. So having really holistic change, you need to connect the dots within the supply chain, and looking at it from even production to processing, distribution, and even consumption. So finding those really pockets of growth within those segments and providing value in these companies is practically where we see more and more opportunities for the future.
Thank you, Mai. One of the attendees has asked where we are in the development of this space, and viewed through the prism of Gartner's hype cycle. So this is a cycle that many may be familiar with. Would you consider it the slope of enlightenment? So are we in an area of increasing growth, or are we at the peak of inflated expectations? And developing from that, is there an opportunity for a bubble, an investment bubble in any of these areas? And should investors tread cautiously in any area in particular, in your opinion? I will probably start it off with you, Michael, and then on to Mai, and then Elliot, if you have anything to add.
I mean, there's always risk for bubble, and maybe some of the valuations they look steep. I can only, give a personal comparison to, I don't know, the year 2005 or 6 or 7, I don't remember well, when Facebook came out and they were raising at 15 billion. And I said, Jesus Christ, I mean, this is, what is that? So I never ever pay 15 billion for that. And then suddenly it's 200 billion. So sometimes, companies and valuations, they really look into the future. And in our space, we have that example. I mean, we will find out if this is a justified valuation or not. But the companies currently, with the most of them we're looking at, they are on a strong growth path. They're addressing multi-billion-dollar markets. Elliot mentioned some of the technologies, which is highly industrially scalable. So we should expect super high cross margins with no climate side effects, etc., etc. And so companies over time will grow into their valuations, which maybe initially sound a little bit high. So that when it comes to probably picking the right investments and making sure that, okay, I accept a high valuation because I am confident, as much as we can be looking into the future, that that company will grow at one given point in the future into that valuation. But market size is there. I mean, so there's plenty of room for growth for many of the companies.
David, it's just that we indeed agreed with a little bit of a cautious approach with what kind of valuations are you stepping in. And we very much like also the inflection point where technology is de-risked and you're starting to commercialize. So you're having more of kind of the pains of the growth and the scale, but not anymore on technology side. So that point of inflection, I think we are trying to really be at the right time and try to find the right price to step into those businesses. And then later on, I think it's more trying to or look at more businesses on the fundamentals, which is still difficult in a plant-based meat.
Thank you.
I defer to Michael and Mai there, so nothing to add.
Thank you, Elliot. Some of the brands we've mentioned so far, or most of them from my recollection, have been really focusing their products on developed markets. I would like to ask if anyone has any inputs on emerging markets and in other geographies where perhaps meat consumption is currently low, but is projected to grow substantially. However, incomes are obviously much lower and availability to pay for some of these new innovations is lower. What opportunities are there in emerging markets, and are you seeing potential opportunities for investment there? I will pass to, is anyone would particularly like to address this one? Elliot. Elliot's being brave and jumping in. Thank you.
Well, yeah, it's a tough one to answer because obviously these are new technologies, and therefore, they're going to be sort of first available to westernized economies that can pay those prices. I think what we really want to see. So I'll just talk about what we want to see, not exactly how we get there. But it's sort of this idea, as you mentioned, that as low and middle income countries increase their income, their diet shifts. This is a pretty well understood phenomenon where their GDP increases and their meat consumption per capita increases as well. And the global meat consumption is expected to rise somewhere between 50-70% by 2050. And so what we really think can happen here in these low and middle income countries and in developing regions of the world is this sort of leapfrogging effect where instead of industrializing and doubling down on industrialized animal agriculture, we can hopefully supply the meat that those countries are going to want through these alternative technologies, just in the same way that Africa sort of leapfrogged over establishing landlines and they went right to cell phone technology. So it would be great if we can get that to happen, which means we need more government investment, we need more private capital flowing in, we need more companies, et cetera. And we need to also start those companies in those regions as well, because they're going to know those markets better than some other companies will. And that's starting to happen. We're seeing some venture funds that are starting up in India and other portions of Southeast Asia. And so this stuff is starting to happen, but we'll really see how it plays out over the coming decades. But it's going to take a further sort of acceleration of investments for that to happen.
Thank you. We are coming up towards the end. So I have a couple of questions that I'd like to ask with very rapid answers. So I'll ask these series of questions, ask our panelists just to give a couple of words as the answer to each. First from the audience is key metrics that you look for, you think we should be looking for the impact of companies in this space. Are you primarily looking at health or environmental impact, or are there any other, what should be the key areas to address? I'll start with you, Michael, because I'm seeing a good nod of your head, then onto then Elliot.
We have decided to report on water reduction, tons of plastic used, CO2 reduction, and animal life spared on a fund level. This is being implemented as we speak.
Thank you, Mai.
Yeah, ESG, how to make it unified and very tangible. I think we're trying to follow UN and PRI principles here. It's work in progress, and we're getting more granular and more detailed.
I think just briefly from a technology perspective, anything that is the most scalable or most easily scaled and efficiently scaled is going to have higher impact. So I think that's really something important to consider for these new companies that are developing these products.
Thank you. Next question, yes or no answer. The think tank Rethink X published a report last year on the food and ag sector, and it made quite a lot of noise due to its prediction that the US cattle farming industry will all be bankrupt by 2030. Is this realistic? Do you believe in this prediction? Yes or no? Michael, Mai, then Elliot.
Yes.
No.
It's optimistic, so I'm going to say no, but the principles underlying it, I think, are true.
Okay, we'll have to reconvene in 10 years' time to see who won that bet. And then lastly, with a couple of minutes to spare, I would just like to open a more broader question and to just ask all the three of you, and we'll follow that same order, Michael, Mai, Elliot, please share your most interesting investment or innovation you've seen in the market and what made it so special. We have about just a minute each.
We like a lot designed proteins, so fermentation technologies, without picking any specific, but that sector, that niche which is coming up, we like a lot.
Thank you, Mai.
To single out one, I think it would be just unfair to many of the great companies that we're seeing and we're already invested in. But indeed, fermentation, cellular based agriculture, lot of Internet of Things that we can implement, robotics. I think it's all we like very much.
That's quite a few there. Elliot, any one particular standout example?
Well, as a non-investor, I'll just speak broadly and say, you know, I'm obsessed with the category of cultivated meat. As a sort of stem cell biologist and academic training, I was just blown away that there are companies, you know, doing this. And the more I've learned about it, the more real I think it's going to be, and the more tangible it's going to be. And so I'm just super excited about the potential of this technology to have a huge impact.
Thank you to the three of you. I have just less than a minute to wrap up, and I think the key takeaways for me were it's really interesting to see the confluence of several factors at play here. We have changing technology, consumer demand, changes in health factors, economies of scale of some of these innovations, and that makes me think that some of the changes we're seeing in the food system are somewhat unstoppable. This mix of factors will change market economics surely. Really interesting to see the diverse range of capital flowing into the space, even my mentioning their pension funds and sovereign wealth funds investing. That's a fantastic sign, I'm sure, for many investors. And the last point, really this topic that we're really generation one, we're early in the development, and new products will come to market that are going to offer us enhanced profiles around nutrition or the environment, and perhaps the ability to address food consumption in emerging markets, which is obviously a huge potential market. Thank you to the audience for your questions. A special thank you to Elliot, Ian, Mai, and Michael for this participation. I'd like to say to everyone, enjoy your day, and we hope to see you at our next panel covering real estate on the 12th of November. Goodbye for now.